And welcome to the Economist Board. I'm John Nelson from M&A, joined by Keith Prather of Armada. How you doing, Keith?
I'm doing fantastic. Happy New Year.
Happy New Year. Yeah, it is a new
Absolutely.
year, isn't it?
It is. It's going to be an interesting one. Yeah.
And hopefully we'll nail what's going to go on in this new year with these videos. We're going to provide some additional content to our forecast of what's going to go on. So we're going to look into the crystal ball and see what's going on with transportation, construction, and industrial production. And not to mention, or not to forget to mention, is one of the things that you taught me was that we always like to take a look at consumer spending because that's 70% of the overall GDP, with retail sales. So we'll take a look at that in our macroeconomic outlook. So if you're not a subscriber, that's a preview of what you're missing. If you are a subscriber, don't forget to take a look at the other videos besides this one, which we're going to hit industrial production right now. So with that intro, shall we jump right into industrial production?
Yep. Sounds great.
All right, let me open this up. I'm going to go to screen number 2. And here we go, industrial production. And, the interesting thing about this is for the longest time, it actually looked a little flat. And you started seeing a little bit of a lift last month and for the forecast, but for the previous months, the outlook has been kind of flat. And if you do a long-term trend on like the last 10 years, it actually is kind of declined just a hair. But for the next few months, we're looking at an increase in overall industrial production, which doesn't look too dramatic on this chart, but I know, Keith, you like to look at the longer term charts a little bit. And it actually looks fairly significant when you take a look at it from this perspective, where we get out at about the 12-month mark.
Yeah. So there are a couple things going on that I think we're going to have to watch in 2025. So number one, you're right. This looks like a very strong manufacturing cycle. And if we do hit the peaks that the model's predicting right now, you're talking about something that looks more akin to like what we saw in 2017 and 2018. And at that time, we had a really robust global transportation industry. The supply chain was rolling at about full blast. There were truck driver shortages. I mean, there was some significant capacity constraints when manufacturing hit that last level. And so anyway, if the prediction's correct, you're right. This is actually a strong prediction, and you see it much better on this chart. So a couple of things that are not in the model, John, is the impact of potential tariffs and
Mm-hmm.
the impact of what's happening with industrial construction activity. And so let's start with the second first. So industrial construction activity in the United States has grown significantly over the last few years. Typically, we'll build about $50 billion in new industrial facilities on an annual basis. Over the last 3 years, we've averaged about 240 billion at a time. And so as that new manufacturing capacity comes online, as we move from the construction phase into the assembly line phase and we start really cranking products off the lines, that actually will start to feed into and get captured by this measure, which is industrial production and manufacturing. So we'll start to actually see this get impacted, and the model may be reading some of those early signs of that increase. The other thing is that what the model is definitely reading is just a very conducive market for manufacturing growth. We know that business inventories have moved from an overstock phase over the last 24 months to now being back in cycle, with a lot of industries actually below inventory levels and below where they should be. They're underweight. And as they start to reorder products now, it really energizes the entire supply chain. And so we're getting, more manufacturing demand, and the model is definitely reading that cycle. And so as we look into this, literally, I just got off a call yesterday speaking to some global logistics managers, and we talked about 2025 being the start of a brand new cycle. So let's talk about tariffs for a minute. Tariffs, if they get applied the way the Trump administration has talked about them thus far, you're talking about 25% blanket tariffs on Canadian, Mexican goods. I don't think ultimately it ends up being that, but for now, that's what they're saying. And then an additional 10% on top of Chinese goods. And that would make total Chinese tariffs somewhere around 60%. So those signals are really designed to drive more industrial manufacturing activity, to drive companies to invest and expand their capacity here. And so I think the IPMAN model overall, I think it'll continue to get these really strong growth currents. But as the model shows, it's going to take a little while, right? It's going to take us into maybe Q2 of 2025 before we really start to see, a lot of this volume really start to hit. So um, we'll see what happens, but at least conditions seem to be conducive for this growth. We can talk about the Federal Reserve and talk about a lot of other things, but generally, all those factors are really kind of feeding into what looks like a much better environment. I mean, consumer spending's up, the Fed is easing interest rates. Not to say that there aren't a few headwinds out there, but generally, I think the industry is poised for a bit of a recovery period. So all looks
Okay.
better. All looks better for the year ahead.
Yeah, and it's what's remarkable to me. You talk about cycles. You mentioned the similarity to 2017, 2018. This whole thing to me, you've got this rise that comes here, coming out of 2008, and then it goes into something that kind of looks like a little bit of bat ears, if you will, right there, that peak. Well, look what's coming out of, obviously a little bit compressed timeline, but a rise coming out. You got bat ears again. And then you have a little bit of a trough. We have our little bit of a trough. What happens? Yeah, there you go. This is that similarity you were talking about, that 2018 period. There it is.
Yeah,
So it's just kind of funny when you talk about cycles and similarities of things in the past.
absolutely.
So,
Yeah.
all right. So I want to drive us on towards primary metals. Let's see if we can get there. There we go. Primary metals looking pretty much the same as it has. It's kind of counterintuitive that the primary metal production is going down when industrial production is going up, but that just kind of indicates you've talked to me about the impact of offshoring, which I'm sure you'll get to. And in the long term, this is consistent with the turn with the trend we've seen. Although if the forecast holds up at that 12 to 18 month mark, it's even well beyond what the trend would call for.
Yeah, this is the only model I think we have across all of them that we'll talk about where we're getting this really negative signal. And yeah, it's interesting because it is part of that continuation of the offshoring trend that we've seen that really started during the Great Recession. And what's interesting about this, John, and the model would not be picking this up yet because it would be considered to be kind of an extraordinary event or not quite a black swan, but it kind of feels like it has that impact. We wouldn't see it in the normal economic data that the model's working with. But the impact of what the Trump administration may do, right? So the imposing of tariffs, the reducing of regulation that allows more domestic mining and output of primary metals, the support of the steel industry and maybe some steel production increases, aluminum, all the smelter activities that will benefit from reducing regulations would possibly reverse this curve. And
Hmm.
we would see it flatten out or maybe even start to see an increase. Whether it would return back to levels that we saw in 2017 and 2018 when the first Trump administration was in office, I'm not sure. But that combination of higher tariffs and reduced regulation could absolutely change this curve. And by, second quarter or third quarter of this year, the back end of that model is going to start to tilt and we're going to start to see that maybe improve. And I think this is the one model that may be in for some pretty dramatic change. So we'll see what
With
happens.
Sorry, I didn't mean to throw
Yeah,
you
that's
off,
okay.
but
That's okay.
the there's been this most recent development with U.S. Steel.
Yeah.
With the Biden administration blocking the sale of it to the Japanese investors. So the question is, what is your thoughts on that? How is that going to play out? And if it does get reversed, let's say by the Trump administration, what could be the impact on that?
Well, the Trump administration actually is in favor. They're in support of what the Biden administration did.
Okay.
So the Biden administration actually saved him from probably having to block it anyway. But that being said, the steel industry is going to need some kind of support. And there's a lot of global pressure right now from steel dumping, There's a lot of low-cost steel around the world that's being used. And so the implication and the imposing of tariffs is probably one way for the Trump administration to kind of fight against that. It means that total metal prices are going to go up, right? There's either you're buying much better but more expensive U.S. domestic produced primary metals, or you're buying foreign metals at a higher price. Either way, prices are going to generally kind of go up on some of these items. Now, when Trump imposed tariffs in the first cycle, 2017, 2018, we only saw a 0.2% increase in inflation. So it moved from 1.7% to 1.8% over that period of time. So the impact was not that dramatic. And I think the current administration is kind of resting on those laurels, saying we can go ahead with these aggressive tariff increases, and it may not have that inflationary impact that everyone thinks it will. But I will tell you that from talking to people in these specific industries where they were hit with these tariffs, it had a big impact, right? They felt it. It was pretty dramatic. So the industry has a lot to shake out as we move forward, and we'll kind of see how it plays out overall.
Okay. All right, let's take a look at fabricated metals. And, this is telling a little bit of a different story. The shape of the curve is also a little bit different. Yeah, I don't know, we softening the slope going up. It still kind of has that flattened plateau at the back end. But the general story remains the same. It's going to be a little, a month or so, not a whole lot of aggressive growth, but then it goes into a period of more aggressive growth. And as you can see, that we're starting to get a little bit. We've joked a lot about fabricated metals in the past. I've just kind of shown the Loch Ness monster, but Nessie's head starting to pop out above the water again.
Yeah, and so fabricated metals, this industry really relies on things like automotive, machinery, some of the other models that we have in the rest of the deck. So it's interesting because you've got a rebound in aerospace, and aerospace is starting to come back. You've got a little bit of a rebound in machinery production. We've got a better outlook for automotive, and we had some nice upticks in automotive activity. So the fabricated metal industry is just being pushed by all those sectors. Non-residential construction, all of them right now really giving it kind of a positive signal. And like other industries, if it finds a little bit of reduced regulatory pressure, able to operate a little more freely, there's some things there that could really loosen up profits. Dropping energy prices would be a big impact for the fabricated metal industry. All that being said, the model is really kind of picking up on all those cycles and all of those signals. And so I think it will definitely be stronger. Not quite right now giving us that head nod to like the 2017, 2018 peaks. But I think actually as we build a little momentum, I think this is one of the models that actually could go higher. So I think the back end of that curve could actually start to continue to go up.
Oh, wow. Okay.
Yeah.
All right. Well, there you have it. That's our look at industrial production as well as key components of the supply chain from the metals side of things. We hope you've gotten something out of that, and we will see you again next time.
Yeah, if you're a subscriber, check out the other models and check out the other videos from all the other sections. If you're not, get a free trial and come in and you can have access to these for 30 days. So, all right, take care, everybody. We'll see you soon.
Take care.
Bye-bye.